Okay, guys, so sales market update. Now, as I was compiling this, the main things that jump out to me this time around are kind of in keeping with what I said last time. Bear in mind, it's been 6 months since I've done an update, so let's whiz through this. Now, number one, there's little sign of any significant lull in the housing market activity as final restrictions eased. Number two, demand from home buyers continues to exceed available homes to buy. Okay, so like I say, very much a very similar theme. You'll see some absolutely incredible stats now from the summer. Now, I realise we're now well into autumn, but as I haven't prepared an update since the spring, I thought it fitting to just give you a snapshot of what's been going on this year since. And effectively, June to June saw huge increase in values, property sales, nearly double the amount of new mortgage approvals, and gross lending's up a whopping 169%. That's June to June, year on year. Now, whilst the housing market has taken a little breath in the last couple of months following the rush of the stamp duty holiday deadlines this year, here are some of the key stats that really highlight just what a phenomenal year the market has experienced. Across the UK, nearly 200,000 sales took place in June, which is the highest monthly total ever recorded. And around 60% of those buyers didn't pay any property tax. You can see the effect of the stamp duty holiday there straight away. Mortgage lending in June hit an eye-watering £43.8 billion. This is over twice the monthly average of the past 5 years. Like I say, a phenomenal month where people were getting through for that deadline. Unsurprisingly, RICS reported the number of new buyer inquiries in July fell for the first time since March, while prices nudged downwards month on month across the nation. However, demand continues to far outpace supply. Now, I think it's fair to say that the confidence in the market is good, with reports suggesting that consumer confidence has risen above its pre-pandemic levels. This is propped up by most of the restrictions easing around the pandemic across the UK. And at 7.25%, UK economic growth in 2021 is predicted to be the strongest in over 70 years. And of course, the Bank of England base rate is still just 0.1%, so mortgage rates remain low, meaning property affordability is on par with longer term averages. Now, as the earlier graphic suggested, annual price growth June to June peaks this year at just over 13%, and actually 10 regions of the UK reached double-digit annual growth in the summer. Most recent figure from Zoopla last month would suggest the annual price growth is back to a more realistic 7%, but of course that's still a really great still a really great rate of growth. The main driving factors behind this are a lack of supply to the market and a strong surge in sales. So some stats on both fronts. Firstly, Rightmove reported a shortfall of 225,000 homes in the first half of the year, which is a large percentage of missing would-be stock. And this hasn't really changed in more recent months either. And it is estimated that 880,000 property sales took place across the UK in the first 6 months of 2021. Now, this is the highest half-year total ever recorded. This is new sales agreed. And it's anticipated that sales will top 1.5 million over the course of the year. So this would exceed the highs of 2007, which of course was an absolute boom before we had a crash back in 2008. So the knock-on effect of this is that asking prices are at a record high in all regions of the UK. And whilst the supply-demand imbalance may well start to ease, the majority of predictions still suggest further price growth over the next 12 months. Zoopla predicts 2022 will see an increase of 3%. And as we've heard a lot of recent times, obviously the pandemic has caused a lot of people to take a step back and reevaluate their needs. And this, of course, has impacted the market in the last 18 months or so. Now, the most common factors for consideration from people are home working becoming more common, so a higher demand for dedicated home office space, demand for additional internal square footage. I think where people have been locked up with each other for so long, they all wanted extra space, you know, man caves, home workout areas, all that kind of thing. More garden space, again, same reason. If you're cooped up in a flat during lockdowns, it was definitely a time to reevaluate what you need. Recent survey actually suggests that about 65% of home purchasers wouldn't buy a property without a garden now. And local environment, you know, more green space, amenities, that sort of thing. And now, of course, with the recent spike in values, a lot of people have increased home equity to play with. So it puts people in a good position to look at the upsides that they may be craving, which I have a feeling will still fuel the new year market as well. And just to end the sales section of this update, a bit of a graphic here breaking down growth by region. Again, it's taken from the summer. Like I say, over the last few months, it's reined in a little bit. But yeah, I mean, you can see England predominantly has had massive growth. Wales, 16.7%. And obviously us in the West Midlands here, The summer really peaked about 15%. Again, that's come down to 7 to 10% now. So in conclusion, I expect the demand to continue into 2022. Rates are set to probably increase next year. I was obviously reading about the likely increase to the Bank of England base rate towards the end of the year, with another increase expected next year, maybe up to 0.5% by next spring or summer or something like that. So that'll be interesting. I think market activity will return to more normal levels. Let's not forget that what we've experienced this year is well above average. And so normal levels might actually seem slow at first, but you know, let's put it into perspective. I think there'll be better buy-to-let opportunities as market cools. Obviously, I know a lot of you guys watching today will be in the market for buy-to-lets. I think that'll get easier for you. And obviously, as Zoopla predicts, I agree. I think price growth will slow. I still expect a bit of price growth, but I think it will slow.